Welcome to BigONE Weekly News Update. I'm Gavin. After 4 consecutive weeks of declines, global markets, and crypto assets in particular, staged a notable rebound last week. Bitcoin briefly tested the $93,000 level, ending the week up 2.6% at around $90,360, though it still logged a nearly 20% monthly drop, the steepest in 3 years. Ethereum rose 4.6% to $2,990, and Solana inched up 0.6% to $133. Global markets post strong weekly gains. Equity markets rallied broadly. The S&P 500 surged nearly 4%, its strongest Thanksgiving week performance since 2008, alongside a 7-day winning streak, the longest in over 7 years. The Nasdaq gained 0.65% for the week, but remained down 1.5% for November. The Dow Jones advanced 3.18%, while Europe's Stoxx 600 climbed 2.55%, closing the month up 0.79%. Meanwhile, the U.S. 10-year Treasury yield fell by about 5 BPS last week and 7 BPS in November. Precious metals were strong as gold rose 3.4% weekly and nearly 6% monthly, and silver soared 13% for the week and 18% for the month, reaching an all-time high. Dovish Fed signals strengthen rate cut expectations. Despite a holiday-shortened trading week, risk appetite improved. A series of dovish comments from Federal Reserve officials, especially from the New York Fed president, pushed expectations of a December rate cut to above 80%. U.S. domestic liquidity indicators, such as SOFR rates and SRF usage, still point to tight conditions. However, the $100 billion decline in the Treasury General Account eased some liquidity pressure, though this was partially offset by heavy Treasury issuance and accelerating government spending. Looking into December, financial conditions may loosen further if quantitative tightening comes to an end. Yet, with fiscal deficits continuing to rise, any relief may be temporary. The Federal Reserve could be forced to introduce a non-QE version of QE, a possibility already hinted at by the New York Fed president, fueling growing market optimism. Tether downgraded. MicroStrategy faces index removal. S&P Global downgraded Tether's USDT stability assessment from constrained to weak. Tether currently backs about $174 billion in USDT circulation, with $181 billion in reserves, allocated as follows: 64% in short-term U.S. Treasuries, 10% in Treasury repos, 24% in higher-risk assets, Bitcoin, gold, secured loans, corporate bonds. The high-risk portion has grown from 17% in September 2024 to 24%, prompting S&P's concerns. Bitcoin exposure now accounts for 5.6% of circulating supply, its highest level and above Tether's safety buffer. In parallel, MicroStrategy has been removed from the S&P 500 and may also be excluded from the MSCI index early next year, potentially pressuring its market valuation in the near term. Selling pressure eases as market indicators improve. Mechanical selling pressure in the crypto market appears to be weakening. The Coinbase spot premium, negative for nearly a month, has turned positive again, signaling renewed spot demand. In the U.S. Bitcoin spot ETFs have also resumed single-day inflows after experiencing their largest monthly net outflows on record. Outlook: a path to recovery, but BTC needs follow-through. With quantitative tightening nearing its expected end and clearer signals on future rate cuts, global financial conditions are likely to continue easing. Coupled with diminishing sell-side pressure, markets appear positioned for a continued recovery. The rebound across global markets and crypto assets reflects growing confidence driven by dovish monetary signals and improving liquidity conditions. However, the recovery remains fragile. Bitcoin must continue to build upward momentum to fully erase recent bearish sentiment, and broader market stability will hinge on the Federal Reserve's policy direction, fiscal sustainability, and investor confidence. While the short-term outlook is constructive, risks tied to liquidity, macro uncertainty, and structural imbalances persist, requiring investors to stay attentive as December unfolds. Join BigONE today and take advantage of the growing cryptocurrency market.